Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a trio of interesting developments from around the globe. First, in the energy sector, Philippine President Ferdinand Marcos Jr. has announced the discovery of significant natural gas reserves off the coast of the country. This finding could potentially reduce the Philippines' reliance on imported fuel and have a positive impact on the nation's economy. Next, we're looking at the state of the global oil market, where prices have stabilized following concerns over tensions between Iran and the U.S., as well as President Trump's surprise announcement regarding Greenland. The situation is being closely monitored by investors, who are weighing the potential risks and benefits to their portfolios. Lastly, across the pond, a new study from the Resolution Foundation suggests that the UK may be experiencing a long-awaited productivity surge. According to the report, output per hour worked has risen at a pace not seen since before the financial crisis, which could have significant implications for the British economy and investors alike. We'll be taking a closer look at each of these stories and what they might mean for your investments throughout the show. Our team of experts will provide analysis and insights to help you navigate the complex world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of small-cap investments, where the landscape can be as unpredictable as it is promising. Joining me today is a discussion on the outlook for small-cap investors in 2026, following a rather tumultuous 2025. According to insights from Anupam Tiwari of Grow AIDailyPress Mutual Fund, the year ahead looks more constructive, primarily because expectations have been reset to more realistic levels. The correction of excesses in various pockets of the market has paved the way for a potentially more favorable environment for bottom-up, quality-focused investing. Tiwari emphasizes the importance of selective stock selection, given the heterogeneous nature of the small-cap universe. Valuations, while not uniformly cheap, offer pockets of reasonable pricing when paired with growth and earnings potential. The approach to small-cap investing seems to be shifting towards a more nuanced, company-specific analysis rather than broad market trends. For long-term investors, periods following consolidation have historically presented attractive entry points. The structural changes in India's economic environment, including better access to capital and talent, formalized supply chains, improved governance standards, and the ability to scale across markets are expected to drive earnings growth. However, this growth is anticipated to be selective, with only a subset of companies likely to achieve sustained, high-quality earnings growth. As we navigate the complex landscape of small-cap investments, it's crucial to balance growth potential with quality and reasonable valuation. The QGRP framework, focusing on quality, growth, and reasonable pricing, offers a disciplined approach to identifying opportunities that can compound over a full market cycle. While 2026 may offer more promise for small-cap investors, the journey is likely to be marked by volatility, and performance will probably be selective rather than broad-based. For those with a long-term perspective and an appetite for interim volatility, this phase could indeed be meaningful, providing a gateway to participate in India's economic growth story. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at the latest earnings trends in the market. It seems that Q3 earnings growth has been muted, with IT companies weighing heavily on the overall numbers. However, banking and finance companies have lent a supporting hand, posting double-digit profit growth. Now I know some of you might be thinking, what's behind this sluggish growth? Well, it appears that delayed decision-making by clients has put pressure on IT companies' profitability. The shift towards advanced technologies like artificial intelligence has led to a change in priority away from traditional digital transformation projects. While top-tier companies have shown agility in striking AI-related collaborations, the pace of execution will be crucial in determining their future growth trajectory. On the other hand, banking and finance companies have reported a second straight quarter of double-digit profit growth, aided by a gradual stability in net interest margins. Their contribution to the sample's net profit has increased to 50%, up from 47.6% a year ago. Excluding these companies, the sample reported flat net profit. It's essential to note that analysts had anticipated double-digit aggregate profit growth, driven by companies from sectors like automobiles, banking and finance, cement, metals, and oil and gas. However, the reality has been somewhat different. As we navigate these complex market trends, it's crucial to remain cautious and informed. Remember, quality journalism is more important than ever in today's world of misinformation and information overload. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.